I think 6 to 9 months from now, the stock has a 3 in front of it. I think it's back to above 300 as ultimately, I believe this is more of an air pocket that we're seeing from a growth perspective. I think margins start to trough out, and going into next year, I think numbers conservative. And the sum of the parts, as Dan talked about, I think when you look at battery technology, FSD autonomous, I could argue it's probably one of the best AI plays out there. To me, this is more of a table pounder opportunity rather than time to hide in the cave.
If you're a fan of Dan Ives and Tesla, then this is a video that you don't want to miss out on. As you already know, Dan Ives is one of Tesla's biggest bulls, and he's a huge fan of Tesla as a car company. The stock investor has made several predictions about Tesla, and today we're going to go through his top 10 highlights of 2023. So let's dive in. In September of last year, Dan Ives reiterated his buy rating on Tesla stock, citing the immense potentials that are embedded in the Tesla business. According to him, Tesla is a very profitable business, and it will keep being profitable for as long as possible.
That Wedbush Securities analyst reiterating a buy today, raising his price target on Tesla to $350. So you actually raise, even though the stock is down and the market's worried about more price cuts. Why?
I think investors aren't seeing forest through the trees, because ultimately what's happening here, we're seeing a stabilization from a margin perspective, better than expected in terms of auto gross margins. You look at units, right now I think on a trajectory toward 2 million, and then this is the drum roll, the Super Bowl, to now what I believe is monetization of supercharger, battery, and I think last night the biggest thing from the conference call, FSD talking to another OEM, because this from an AI perspective is ultimately how I see Tesla getting to $1.5 trillion, $2 trillion
licensing
market cap.
FSD to another OEM. I mean, he said early days. It's never clear. We got no clarity on who it is or how far along or whether it may even come to fruition.
But ultimately, this is, for Musk, I think ultimately this is really the first step of what's going to be a broader strategy, because they've built it. I mean, if you look at FSD,
full self-driving,
and I'll argue, Sarah, that's AI. I mean, we could talk. It's basically AI for automakers. You look at full self-driving, you look what happened with superchargers, and ultimately now batteries. And I think the story's stabilizing from a margin perspective. The poker move massively played off from a unit perspective. And I think that's why this year, I think this is just the start.
The poker move being lowering prices.
Because if you look at the lower prices, sacrificing prices for demand, it paid off, not just in China, in the U.S. And I think what you're seeing right now with EV play out, you're starting to see this green tidal wave we viewed as the biggest transformation to the auto industry since 1950s. It's Tesla's world. Everyone else is paying rent. And I think last night was just another chess move while other automakers sit there playing checkers.
What about the factory potential delay of shipments? That was something that was flagged on the call.
Yeah, and
is that a big deal?
Yeah, and that's one where, and to your point, a bit of a downtick, production offline from a manufacturing perspective. See, I view that as really what's going to be the start of a refresh for Model 3s. So I think that's a smart move, because you're going to have refresh of Model 3s, you got Model Is, and then ultimately the Cybertruck, we think production starts around Halloween. I think we will start to see Cybertrucks on the road in the month of December.
You do? And do you think people are actually going to buy them?
I think right now, if I look just where price points are and just what demand looks like from pre-orders, this could be something where ultimately it's $200,000–300K per year as it starts to ramp in terms of Cybertruck. And that's why Austin, if you look at what Tesla's done, Austin, Berlin, of course, China, what we see now more and more, what will be coming out of India and others, they got the scale and scope where no one else has. And I think that's what's starting to play out here. I view Tesla, it's Apple, 2008, 2009 in terms of the story playing out.
I mean, you know, some of our viewers, you've been right, by the way. I want to make that clear, and that's the most important thing. But people say you're just a perma bull. Is there anything that this company could do that would change your opinion?
Yeah, and to that point, like if we start to see like massive demand issues in China, more price cuts where margins get cut and you start to get to 13, 14, 15% margins, then that changes the thesis. But David, to my view here is that we are in the second inning of just a massive transformation in this fourth industrial revolution, not just in terms of electric vehicles, but I believe also when it comes to Tesla, it's the AI story. I think the sum of the parts story, I view this as an AWS moment, similar to what we saw with Amazon, AWS.
You said it.
That's starting to happen now. Supercharger, battery, AI.
In 2023, Dan Ives highlighted Tesla's trailblazing deal to share its supercharger network with other EV companies as a money-making opportunity, adding that its profitability and profits are likely to keep rising once it's able to roll out its full self-driving technology more widely. Tesla is known for its innovative electric vehicles, and even more, it has a competitive edge when it comes to charging infrastructure. The automaker's supercharger network is also one of the only global EV charging networks that is fast charging, and in North America, it is by far the most extensive and reliable. Tesla has built over 3,000 of these stations with more than 25,000 stalls around the world, and it plans to open up its network to other EVs later this year. We believe that this could be a lucrative opportunity for Tesla, and it could generate a lot of revenue from charging fees and attract more customers to its ecosystem. Hey guys, welcome back to Tesla Tomorrow. What investors have got to understand is that Tesla's supercharging network is more than just a convenience for Tesla vehicle owners. It's a strategic asset that holds significant revenue-generating potential. Dan Ives has also been very vocal about the growth of EV demand and how it will affect Tesla in the long run. The Tesla bull believes that Tesla is way ahead of other auto companies when it comes to car demand.
There's always been a fear of unions at Tesla. I just see that as basically minimal probability that's going to ever happen. I think Tesla, it's a win-win situation because when you look at the big three, what's happening here, it's a debacle in Detroit because ultimately this is going to be passed to the consumer when eventually they do get a deal. And the EV strategy, I mean, this is a gut punch to borrow Farley what they've built over the years. And I think that's really the frustration right now in this Rubik's Cube, where I believe the UAW deal, if they took that, it would essentially impair the business models for us in the next decade.
For the big three, that is. It will impair the business model because they'll be forced to pay so much more to the workforce that they will not be able to invest in the conversion to electric vehicles?
Exactly. I mean, if they actually sign this deal, I mean, these business models, the street would basically view it as an Everest-like uphill battle to ever be successful because it's ultimately one hand tied behind their back. They're going up against non-union Tesla, non-union Rivian, foreign automakers, and that's why right now champagne on ice has been for Tesla in terms of the pending competition that's coming out of Detroit. And that's why this UAW, it's a nightmare on Elm Street in terms of what's happened in Detroit.
Why is it that Tesla's demand has been so soft? Is it simply that they've overproduced and they can't cut prices enough because there's just no pent-up demand additionally for EVs? And there's another, but why is it that those delivery numbers and that they have so much excess inventory right now? How long is it going to take for that to be absorbed?
So we think it's really fourth quarter. I mean, if I look overall, take a step back, if you look at 1.8 million, what I believe is going to be deliveries for the year, that's a super strong number relative to the environment. I think margins trough, and Phil's talked about that as well. Q4, I think you have a Cybertruck that starts production, a refresh of Model 3, and I think in China, they actually start to gain more share. That's why, in our view, this is more of what I view as a pause into the next phase of the Tesla growth story, which is why we've been telling our investors here, you continue to own this name.
How did they go from not being able, a year ago, not being able to meet demand to the situation where they are right now?
Yeah,
what happened?
Look, demand definitely softened. We've seen that in China in terms of essentially a price war that's happened in China. But I believe the poker move of cutting prices, that was the right thing. I think we've seen it in the stock in terms of stimulating demand for Tesla. But no doubt, they are definitely going through a transition in terms of what we're seeing with demand in the U.S. globally. But if you look at scale and where we believe they could get to production, we're going to be looking at next year or two a company that's going to be 2.5 million, ultimately in the 3 million. What they're going to see from a delivery as well as a production. I think this is just, Tyler, in my opinion, this is just what I'll call the middle phases of the next phase of the Tesla growth story taking place.
I wonder, though, about competing with BYD. I mean, they have more models. They update them more quickly. They have more colors. You know, it's already, Chinese models are like some of the top selling vehicles in Europe already. They also have, what's the smaller one with the four letters? Anyway, it's not just BYD, which is formidable, but there's other Chinese automakers as well. And you read about these are not like, you know, low cost, cheap businesses. BYD is like, it's like the Japan of the 2020s in terms of the impact that Japanese automakers had on the market back then. So you do wonder if Tesla, even having an advantage to the big three, how does it not get undercut? And if they keep the Chinese cars out of this market, maybe it'll be fine. But how does it not get undercut?
Look, this is an arms race. I mean, this is a Game of Thrones that's going on. And you see what happened in China. I've seen it firsthand. BYD, NIO, Xpeng, and others. I mean, it's some of the best EVs out there. I think where Tesla has been so successful is because of their ability to expand gig in terms of Shanghai, what they've been able to do from a price perspective. And the Chinese consumer, especially in the high end or rising middle class, they do want Teslas. But to your point, do Chinese EV vehicles come here into the U.S.? Ultimately, that actually becomes the issue because that's going to be.
What do you think will happen? If you have a second Trump administration, there will be presumably tariffs or protections against the importation of Chinese vehicles. I would guess.
So
I don't know.
They're still on him from his first administration.
Well, yeah, they're still on it.
Yeah.
And I think what's happened right now. Look what's happening out of the Beltway. Detroit Big Three. I mean, it's been gut punches from UAW. But now, if you ultimately have Chinese EVs come in, that would just add to the worst. So I continue to see that as a cement wall that does benefit Tesla, benefits the Big Three. But right now, they're in that cage match with the UAW, where, in my opinion, that's really the frustration that's building, not just in Detroit, but across the industry.
It seems the one missing plank for Tesla would be if they had a Model 2 or some kind of lower cost mass market car that could compete against the Chinese or just make it more affordable for a lot of Americans who might be tempted to switch. But that feels like it's just way off in the distance at this point.
But I believe by the end of next year, a sub 30K vehicle is introduced by Musk, plus with Cybertruck. And that's why I just view this is in the early days, even with supercharger and the sum of the parts. This is not an auto company. This is a disruptive technology company. That's why we're buying here, despite what I'll call definitely nothing right home about type of 3Q delivery number.
All right.
Dan Ives believes that Tesla has a huge opportunity to dominate the EV market, which he expects to grow from 5% of total sales in autos today to 25% by 2025. He also thinks that Tesla will have a strong advantage in battery technology, software, and autonomous driving, enabling it to maintain its leadership position and fend off rivals. In a previous interview on CNBC, the stock expert talked about his bullish position on Tesla, noticing that he sees the automaker as a dominating and disruptive technology company that is changing the auto industry and creating a loyal customer base. The Tesla bull also added that he's not too worried about the supply chain woes that Tesla faces, as he believes that the company will be able to overcome them and deliver strong results in the fourth quarter of 2023 and beyond. Similarly, Dan Ives has been vocal about the Cybertruck, a revolutionary truck that the automaker and its investors are anticipating. And for Dan Ives, this is going to be a game changer for the car company.
Tesla's been here before, right? I mean, many for the last decade have, I think, been doubters and been proven wrong again and again by the Tesla growth story led by Musk. And here it's on the edge, at least from a design perspective, but it's millions of reservations. Now, look, let's say 40, 50% of those convert. This is going to be steady state in the 25 to 250,000 vehicles per year. And that moves the needle financially. And I think that's the key here in terms of Musk unveiling tomorrow afternoon down in Austin.
What percentage of those pre-orders actually turn into real orders? I mean, based on what we've seen from all the other vehicle launches. Because, for example, with the F-150 Lightning, we saw a lot of orders for that before it came out. I mean, I know there's so many orders for the Cybertruck, right?
Yeah, we estimate it's probably about 40, 45% in terms of the amount that ultimately convert. I think many, if you look at this, it depends on wait time. I mean, but look, what we've seen with Rivian as well. I think the biggest thing tomorrow are two things. One, pricing needs to be within that 60 to 80K in terms of price points. Anything higher, it's hard to hit mass market. The other thing is production. I mean, this is going to be very complex to produce. That's why they built Austin in terms of Gigafactory, and that's going to be the key. But again, backspin against the wall again, and I view this as really, what I'll call almost a trophy case moment, as they're able to kind of have success here again.
And so at this point now, when we think about EVs and the demand for EVs, I mean, I think the theme is that EV demand has been slowing some overall. Are we going back to a more hybrid theme? Maybe not exclusively EV, maybe people don't love EVs as much as they thought. In 10 years, is it going to be EVs the way we thought or something a little different?
I think it's somewhere in between. Now, look, 3-4% of autos, does that go to 40 to 50%? Okay, let's say it goes 20%. We're still talking about trillions of dollars of conversion. I do think if you read the room in terms of what Mary talked about in the GM call, I think they're even walking back a little from hybrid and in terms of where ultimately this is going to go. But the reality is that Tesla continues to really be the driver in this market. And from an innovation and tech lead and scale and scope, at the top of that mountain is Musk.
And that may be very well why Mary Barra is walking that back. You know, they had the UAW, they made this settlement, and one of the pieces of the settlement was less spending, and some of that less spending is actually adjusted spending outlook is going to be on less on EVs. And maybe they're just not trying to compete in that space as much, maybe because Tesla is such a leader, maybe because there's so many other names, whether it's BYD or, I don't know, what would you say is second to Tesla?
I think BYD, clear. I mean, if you look globally, that's number two. But I think what's happened in GM4, what's happened across the board, it's like you're starting to see the scale and scope is the complexity. To get to that point, to get to go to market, it's hard. And I think ultimately it's really Tesla has such a lead. This is really, in my opinion, their way to almost stretch that, at least even from a mind and market share, as this arms race does play out in EVs in 2024.
The Tesla Cybertruck is a project that's been highly anticipated, and now it's here, we can only think of so many things that Tesla can achieve with the truck. Before we carry on though, if you like this type of content, hit that like button, subscribe and turn on post notifications to keep up to date on everything going on with Tesla. Dan Ives has always described Tesla as the golden child of Musk's empire, adding that the car company has changed the auto industry in the same way Apple changed the world of phones with its iPhone. However, Dan Ives does remain bullish on Tesla, and there are also times when the stock investor has cut his Tesla stock price target.
Joining us this morning at Post 9, Dan Ives, Wedbush Securities Analyst, does cut his target to 310. He was at 350, but keeps the outperform rating. Dan, it's great to have you. Thanks for coming in. What about it made you say that?
I mean, if you looked up disaster in the dictionary, there'd be a video of last night's conference call. And I think the problem is that the street wanted to get details. Have the price cuts ended? Where does the gross margin outlook look? What does demand ultimately look into 2024? And instead, it was really Musk put on his macroeconomist sort of hat. And that's not what the street wanted. I think it was lack of details. And ultimately, it was a somber note. Especially when it looks at Cybertruck and you look at the margin outlook, and I think the long-term thesis is still there, but with no rose-colored glasses, I mean, this was definitely what I'd call a disaster.
Would you expect anything different from a guy who runs a company whose goods are 90% financed? Right? I mean, that's the automobile.
Yeah. Now, look, there's no doubt that that's something that's helped him and now hurts him. But Carl, I think the big issue was really around the price cuts, because as you've seen the price cuts, there was a view that it would start to end by this point. And ultimately, by having the door open and also by losing your CFO, that was, I think, a huge part of the credibility. Investors came off that call last night. I can tell you, institutionally speaking, just a lot more questions, no answers. And I think that's really the frustration, and that's why you're seeing the stock under almost extra pressure because of that head-scratcher conference call last night.
Dan, you're one of the biggest bulls on the street. You come here all the time and have talked up Tesla for years, correctly so in many ways. By the way, I'm glad you're here on a bad day, too. But what did you get wrong here?
I think what we got wrong in the short term was the price cuts were going to end. And you knew the poker move of the price cuts this year has paid off massively. And I think that's really showed from a demand perspective. But that really 95% of the price cuts, I believe, are done. I thought Musk would have put the line in the sand, maybe a few more price cuts, then we're over. Instead, by leaving the door open, I think the communication is maybe what we underestimate even from Musk. by not putting a line in the sand, that's the frustration here, because now it's a Pandora's box and you can't put the genie back in the bottle.
But how can he put a line in the sand on price cuts when we see the 10-year yield and the 30-year yield move up every single day to new highs? And if that's really what's driving it, how can you know?
Yeah, and it's a great question. I think it's really about the price cuts in China. And if you look what's happened there, even BYD and some others have started to soften some of the price cuts. And I think by continuing to cut prices, especially in China, that price war, they're actually making worse. And I think that's been the biggest thing, because you're talking about 40–50% of overall demands coming out of China. We believe the long-term story is intact. The sum of the parts thesis, full self-driving, AI, what they're going to invest in. But no doubt in the near term, and because of that conference call, I think you're definitely going to see uncertainty. It's almost an albatross right now that's around that
Where
stock.
is the operating margin? 7.6%, I think, came in. How does that... That's like closer to other automakers, right?
Well, yeah, because, they were in a massive position of strength, come down toward other automakers, and now it comes down to, does this start to stabilize, increase from here? Obviously, software. You could argue FSD is going to be a big piece going forward. Look, we've been here before. We've seen it in 17 and 18. We've been through some of these white-knuckle periods with Musk. But I would put last night as a top 3, probably worst conference call I've heard from Elon, in the last few years.
One of Wall Street's top Tesla bulls cutting his price target on the company to 1,000 from 1,400. Dan Ives is Wedbush Securities Managing Director of Equity Research. He joins us on the Squawk Newsline to explain his call. I guess, Dan, it's not as simple as seeing a stock that's breaking below 700 when you have a $1,400 price target. You normally wouldn't have a 100% appreciation. I don't know how long your price target. I don't know what the duration is. But it just seemed, I've seen a lot of analysts just do that when they're wrong about which way the stock's headed, and they lower it just so they don't look ridiculous with what they're on record for. But you've got a rationale here based on China.
Yeah, and that's never been our DNA. Look, it all comes down to China. China is the key part of our bull thesis in Tesla, and really, I'd call it an epic disaster, what we're seeing so far for the June quarter. I think for deliveries as well as production on the zero COVID issues, deliveries are going to be soft, and I think the trajectory is going to be a lot slower for the second half of the year, and that's why we're lowering the price target, cutting numbers, and clearly I think at least over the coming few weeks, it's some darker days ahead for Tesla in terms on the delivery side.
Now that I recall, we had Munster on earlier, and I guess he said his price target's 2,500. For Tesla. Your bull case on Tesla, even if the 1,400 or 1,000, where it is now, is in large part a story about China.
China's the hearts and lungs of the Tesla story. And, we were optimistic, that they were going to be able to navigate some of these issues better than expected. But everything we've seen over the last week, makes us a little more negative in terms of June as well as second half. And look, we call like we see it. And we're still bullish on Tesla in terms of the long term. But then, look, you combine this with the circus show that we're seeing with Musk and Twitter. It's just been, really a Category 5 storm for investors in terms of feeling like Musk is essentially out to lunch at a time that Tesla ecosystem has never needed him more in terms of the supply chain issues in China.
While Dan Ives kept his outperform rating on Tesla stock, he lowered his price target from $300 to $250. This came after the stock investor noted that Musk's focus had shifted from Tesla to Twitter, and this ultimately caused fear that the Twitter controversy would neglect and negatively change Tesla as a brand globally. According to Dan Ives, Musk is gradually shifting Tesla from its massive position of strength and has managed to do what the bears have unsuccessfully tried for years, which is crushing Tesla's stock by his own doing. Dan Ives' action was also triggered by the changing maker condition, particularly as the competition in the EV industry continues to get tougher. To overcome this, he thinks that Tesla's stock price will actually be the trick that solves all these demand problems by cutting it.
Well, it's only up 138% for the year. Let's bring in Wedbush's Dan Ives to break down what to expect. Welcome back.
Yeah, good to be here.
Options are pricing in a bigger move up or down than we normally see. Why do you think that is?
I think it's really about margins. They're going to be able to show that margins are troughing and could start to rebound into later this year. If that happens, combined with what we're seeing on deliveries, especially in China, I think that's the 1-2 punch that ultimately gets this on its path to $1.5 trillion.
Gross margins could be the lowest in perhaps 6 years.
Yep.
What makes you believe that they're troughing at a time where Musk is obviously putting growth over profitability, which he's made it clear himself?
And in our opinion, that was the smart strategic poker move that they needed to ultimately do to go after volumes, cut costs, cut prices. But I think the price cuts, 95% of it is in the rearview mirror. So I think now you're starting to see ultimately stabilization there. I think battery cost, ultimately, that's coming down. It gives them a tailwind, scale and scope. And ultimately, I think as we go into this year, this is now going to be that trough moment. I think it was a moment of truth. And ultimately, I think he continues to play chess, others checkers.
Why do you think the price cuts are done?
Just from a demand perspective. What we're seeing specifically in China, where there's really been a price war going on, we're now starting to see demand continue to uptick. And I think that's important. This is going to be a record China quarter. That'll be a big focus in the call in terms of how Musk talks about from a demand perspective. And also margins in China are incrementally higher than in the U.S.
You don't think we're going to get a potential price war here in the U.S.? I mean, you look at what Ford did with the F-150 Lightning, you drop it by $10,000. No surprise that they do that after Musk has repeatedly done it. You know, they're coming out, Tesla is, with the Cybertruck. I mean, how do we think about all of that in the context of a potential price war here?
Yeah, I think for Tesla, I mean, they're in a massive position of strength because of those margins that are just so far above the industry.
Sure, well, Musk wants to remain in that position of strength. That's my point.
And to your point, I think Farley and Ford, they heard the footsteps of Musk. They hear the footsteps of Rivian. I do think that was a smart move for them. But ultimately, if you look at Tesla, you know, they really continue to be more and more a position of strength because they could do this. And I don't really see a price war in the U.S. because today, from a demand perspective, we are still in the first inning of this EV green tidal wave playing out.
They already reported, you know, amazing deliveries in the quarter, right? Up 80-something%. We're going to get anything that you're paying attention to, especially closely on the delivery angle today?
Yeah, I think they'll probably tip the hand a little about potentially delivery second half of the year. What I believe is going to be toward that 2 million vehicles overall for the year. Streets call it 1.8 million. That's important because now we start to get over that 2 million mark into next year. With Cybertruck coming in terms of that drum roll, also expect an update for them to reiterate productions on par. Look, I mean, the bears will focus, of course, there'll be certain things to focus on, margins and some others. But I believe if they call it trough, line in the sand, this is a stock that ultimately heads back toward 350.
I mean, you point out the bears are going to point to negatives. I mean, the stock's up a lot. Gross margins are coming in. So why do you necessarily have to be a bear on the stock to point out some of the concerns that exist on those really, I think, key metrics?
Sure.
Why can't you just be a realist on sort of where things are relative to where they were, both in terms of price and in terms of margin?
No, and it's a great point. I think clearly you've seen gross margins come down significantly. I think that was the right move. I think it's really looking forward because I think the major change in the story is that AWS moment in terms of the supercharger, Ford, GM, 313 area code now using Tesla. And I think the next steps, it's battery and the big drum roll. What I view as sort of the Super Bowl for them, it's AI. Because I could argue from an AI perspective, that's not even priced in here, which is why I think they're really, right now, I think ultimately just starting to sort of turn the corner on that strategy.
What about Cybertruck? What are your expectations there?
I think that's, if you look at it coming out of the gate, I think you'll start to see deliveries early next year. You'll see ultimately 200 to 300K units as it sort of gets to some sort of scale. And then you look what's happened with F-150. I mean, this is something for Tesla that's just going to add to the overall growth as well as what they're going for in the consumer. And it's going to give them more scale in Austin, which ultimately is just going to be a big part of their success, especially on the batteries.
Last year, Tesla made a decision to cut prices on its cars. The automaker lowered the prices of some of its models around multiple markets. And while several analysts claimed that it wasn't a good idea, Dan Ives noted that unlike what these other analysts were fearing, Tesla's decision to cut prices is the right move towards drawing in enough demand for its cars. He also noted that Tesla cars could be much cheaper than they are currently by 2025. By making these vehicles more affordable, Tesla aims to attract a wider range of customers, including those who were previously on the fence about buying an EV. Also, lowering prices allows Tesla to maintain a competitive advantage in the fearlessly competitive EV market. By staying ahead of the curve and offering competitive pricing, Tesla can better position itself against other automakers in the EV space. Dan Ives also reiterated his opinion sometime in July last year, where he disclosed that Tesla could be having an AWS moment just like Apple.
So, 2/3 of the world is covered by water and the rest is covered by you, Dan Ives. There's a lot of stocks in your universe that you cover, but Tesla's certainly right up there. What is it about the stock right now and the company that is giving you so much bullishness?
Yeah, I think what's happening, it's a sum of the parts. I'd almost call it an AWS moment, almost an Apple services moment for Tesla. Because what's starting to happen now is that the 313 area code, after years of resisting, they recognize they need Tesla. And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental $3 billion, $4 billion a year of revenue that was not there. And I think what's starting to happen right now for Tesla, from batteries to supercharger to storage, the sum of the parts thesis is now starting, I believe, in the early stages to play out with investors. That's really what's starting to happen now with the stock, in my opinion.
There is another theory that, yeah, he got them on the network and he got them on the technology, but that design, they have 100 years of refreshing designs with high frequency, and in the end, that's going to mean better unit sales for the legacies than perhaps the Teslas. What do you think?
Yeah, my view is that Musk needs GM and Ford actually be successful for the broader EV vision in terms of just adoption in the United States.
Move the adoption curve higher.
And it's the jobs thesis, in other words, like from Apple, and I think that's really what's starting to play. And that's why right now you're seeing Farley and Mary ultimately partner with Musk, because I believe this is just the first step. It's starting with superchargers. And ultimately, I think next step could be batteries technology. And I think that's the golden goose right now, is that they've built the castle, waiting for others to call. Farley called, Mary called. And I think it's just the start of what I view, especially with demand I view it stable in terms of, what we saw coming out of our Asia checks being in Asia the last few weeks. Margins, I think now are starting to trough out the next 1 to 2 quarters. And I think that's why investors right now are really starting to look at this in a different story.
So explain to our viewers just the revenue opportunity from these charging stations. How does Tesla make money from them? What are other opportunities that it has from all these cars stopping at these stations?
Sure. So 12,000 supercharger network. And when you start to think about it, they're really the only one. That's why range anxiety, why would a Jim, a Dave, a Sarah not buy an actual technology? Why would they not buy EVs? It's because of range anxiety. So now supercharger, Tesla has it. They basically they make per charge. Now from a revenue perspective, services, we think by 2024, it's about $10 billion that we're talking about annually revenue, margins much higher than autos. So that's almost like software-like margins. Now, GM Ford, you get, let's call it 1 million cars on that network. That's incremental in the billions, 2, 3, 4 billion per year that was not there on an annuity. And I think that's why what you're starting, the reason I call it an AWS moment is I think for many years, AWS not really valued from an Amazon.
Right.
Now all of a sudden,
you
that
can
was
throw
a big
pretty
part.
high multiple on a recurring revenue stream like that, right?
Apple services, okay, I'll assign $100 billion. You go back years ago, today, we think it's worth $1.4 trillion. So that's why I view it in terms of the reason I believe Musk is playing chess and others are playing checkers, you're now starting to see it play out.
Dan Ives raised his price target on Tesla from $215 to $300, adding that the recent collaborations represent a large monetization opportunity for Tesla. According to him, Tesla is just getting started with selling across its infrastructure and technologies, and an AWS moment is at hand. For those who don't know, AWS refers to Amazon Web Services, which went from a risky bet to an enormous success for Amazon. It's interesting that what is today a dominant cloud computing platform started off as essentially what an internal cloud system looks like to just the regular average Joe, and that the online retailer built itself out of necessity. Dan Ives told CNBC that he believes that this is just the first step for Tesla, adding that the automaker started with superchargers and is ultimately looking at what the next step could be, and that is battery technology. But that's not all. Dan Ives also revealed the golden vision for Tesla, a vision that could potentially change the story of the company.
Welcome back to the Watch List. I'm Caroline Woods in for Nicole Petalides. Let's talk Tesla. And when we talk Tesla, we of course talk to Dan Ives, Managing Director, Equity Research at Wedbush Securities. Dan, happy Friday. Good to see you. Thanks for joining us.
Happy Friday to you. Great to be here.
All right, so Dan, Tesla shares took a beating after earnings, basically flat today, but down about 6.5% on the week. Yet you raised your price target after earnings. So what has you so upbeat and what has investors so downbeat?
Yeah, I mean, Carolyn, we've talked about this before, me and you. This is just what I view as the second inning of a 9-inning game for Tesla. And I think ultimately now you're starting to see demand stabilize and I think ramp, especially in China and the US. Prices, now look, Musk didn't take off any more price cuts, which why the stock knee-jerk got hit a bit, but they're not going to put their back against the wall. And I ultimately believe 95 to 98% of price cuts are in the rearview mirror. And now you start to get that sum of the parts story from superchargers to AI/FSD, talk about the OEM that they're in talks with, to battery technology. And I believe this is a stock that continues to go higher despite this knee jerk after what's obviously been a parabolic year.
But Dan, you were already, of course, bullish on Tesla with a $300 price target. You bumped it to $350. What specifically stood out to you from this earnings report or from the earnings call that warrants a $50 price target bump?
Yeah, I think ultimately it's really become the autonomy of electric vehicles in terms of everything that they're doing, because now from a valuation perspective, it's some of the parts. It's not just from a demand, from an auto, from a delivery. I view now you start to add what the battery technology could be, what superchargers could add, and ultimately the drum roll. And I believe this is how you get to $1.5 trillion, $2 trillion market cap. It's FSD AI. So I view stock selling off knee jerk. I view that as sort of table stakes relative to where I see the stock going over the next 6 to 12 months. And I think yet again, over the coming months, the bears will go back into their caves in hibernation mode.
What is the opportunity in licensing FSD? Because I know you're bullish on that. You just mentioned it. But what's the end game there? What could that look like?
I mean, I think that could ultimately be even bigger than the opportunity that we've already seen in Tesla the last decade. But because of the software-based opportunity on FSD, and I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5, 10 years, and obviously Kathy talks about this for robotaxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at $3 trillion, where a lot of investors thought $1 trillion was never going to happen.
But Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over. Do you think he's going to have to continue to slash prices to spur demand, and at what expense or what cost to margins?
Look, I think around the edges, you can maybe see some rebates, some price cuts, but ultimately in terms of margins, I think they're flatline. I think flattish, ultimately they start to rebound in Q4 into next year.
Dan Ives has some very interesting predictions for Tesla. Just as what he thought with what he dished out for his Tesla bull cases, Ives surprised Tesla investors and predicted a 50% rally ahead for the automaker.
Clearly, 4 out of 4 of our traders tonight are negative on Tesla, so we had to bring in a pinch hitter here to play the bull. Our next guest has a $310 price target on Tesla. That is nearly 50% upside from here. Let's bring in Wedbush's Dan Ives. Welcome back, Dan.
Yeah, great to be here.
Good to be here. Yeah, it's great to have you. Should it be kicked out of the Magnificent Seven? Does it go to 50? I mean, like, where do you start?
I mean, I think 6 to 9 months from now, the stock has a 3 in front of it. I think it's back to above 300 as ultimately, I believe this is more of an air pocket that we're seeing from a growth perspective. I think margins start to trough out, and going into next year, I think numbers conservative, and the sum of the parts, as Dan talked about, I think when you look at battery technology, FSD autonomous, I could argue it's probably one of the best AI plays out there. To me, this is more of a table pounder opportunity rather than time to hide in the cave.
Can it grow? Can it gain market share? Can it achieve scale if China is weak? If there are issues in China? I mean, if Li Auto is really, I mean, it had a very good quarter. It reached 100,000 units. That's the point when Tesla started making it work, 100,000 units. And it's at that critical mark now. So maybe it's poised to sort of, really win the market there.
Yeah, look, you raised great points. Moses, obviously raised great points. I mean, I just got back from Asia. I was there for 2 weeks. I mean, in my opinion, the China story, the cuts they've done, that's the strategic poker move they needed to do. No doubt, demand softened, but I do believe we're starting to see some equilibrium where I look out into next year, you look at 2.3, 2.4 million units, 40-50% of that needs to come from China. So to your point, no doubt, China is the hearts and lungs of the Tesla growth story. But it goes back to, look, the bears have hated this. If you go back 5 years ago, 3 years ago, and I get it, they view it as an auto company, as Danny talks about. I view it, and I've always viewed it as a disruptive technology company, which is why I view the sell-off here and a lot of the hate as more the opportunity to own it, rather than the time that there's some sort of, fire in a crowd theater.
No hate here, all love. But you know what? I think Elon Musk doesn't love the fact that interest rates have been going higher. He made a point of talking about it at length a couple of weeks ago. How important is the bond market to the Tesla bull story?
I mean, look, Musk called it out. And then again, it goes back to, like, that was a disaster conference call. We talked about that, just the way that was handled. Yeah, of course, it's very important because the price cuts, essentially, nothing even happens to that relative to the consumer. And I think, as Nathan's talked about, ultimately, you need to see that come down. You need to see the China story stabilize. You have a lot of competitors come from all different angles. But if you look at Lucid and others, it's very hard to scale. And I think it just continues to come down. It is still Tesla's world, and everyone else is paying rent in electric vehicles.
So if you look at the gross margin part of the story, where do you think that's going? And what do you think is a right multiple, at least to think about? You say it's a disruptive company on many fronts, but the auto business alone, how do you think about that?
So I think from a gross margin perspective, I think it troughs out over the next quarter or two. I do believe 95% of the price cuts are in the rearview mirror. And I look from an auto, if you actually look at the EV business, I think the EV business is worth $250 to $270 per share. Then you start to look at the sum of the parts, the battery technology, FSD, and what I view as the supercharger now, with them essentially being de facto in the U.S., that's another $30 to $40 per share. That's our view as a disruptive tech company, not as an auto company.
Dan Ives believes that Tesla has a huge opportunity to dominate the EV market, which he thinks is going to grow from 5% of total sales in autos today to 25% by 2025. He also thinks that Tesla has a strong advantage in battery technology, software, and autonomous driving, which will enable it to keep its leadership position and fend off rivals. In a previous interview on CNBC, the stock expert talked about his bullish position on Tesla, noting that he sees the automaker as a disruptive technology company that is changing the auto industry and creating a loyal customer base. Dan Ives also noted that he's not worried about supply chain woes that Tesla's facing, as he believes that the company will be able to overcome them and deliver strong results in the fourth quarter of 2023 and beyond. Interestingly, the stock expert also predicted remarkable Q4 numbers for Tesla, and that's what we just recently saw. Tesla outperformed in Q4, and a lot of investors and analysts couldn't stop talking about it.
I mean, we got these delivery numbers from Tesla, and when you look at them sequentially, a little disappointing, but still year over year, you're seeing the growth. What did you make of it?
Yeah, I mean, Nicole, I just view it year over year. It was strong, especially relative to this environment. The price cuts are working, specifically in China. And if you look at the factory downtimes, this sets up what I believe is going to be a very strong Q4. And I think that's why the street shrugged off these numbers, which clearly were disappointing.
You know, when we talk about, people start comparing other makers, like Rivian, for example, to Tesla, because they get excited and they're seeing Rivian on the road now. But, you know, Rivian delivery 15,000 plus to Tesla's 435,000 plus. Rivian's probably going to come out with 52,000 vehicles this year versus 1.8 million for Tesla. I mean, is Tesla still, I mean, I know BYD is on its heels too. Where does Tesla stand? I mean, to the people who are the naysayers for Tesla, what do you tell them?
I mean, the scale and the scope is unmatched globally. I think when you look where Tesla is, I think, look, one of the biggest risks, if you look at the thesis, was GM, Ford, Detroit. That was going to be competition in the U.S., but now this UAW debacle, that's actually been a win for Tesla. I think when you look in China, price cuts, that price war has happened, BYD, NIO, and others, but Tesla's actually gained share. And I continue to think going 2024, they're in a massive position of strength despite a shaky macro.
And when people say that Tesla trades more like a tech company versus an auto company to try and justify the valuation, I mean, you have a 350 target. It's at 247 today. Tell me why the valuation is justified.
Well, I mean, Nicole, you've talked about this a lot. I mean, we view it as a disruptive technology player, not an auto company. I think if you look even at the sum of the parts that's now starting to play out, supercharger, battery, ultimately FSD, AI, what separates Tesla from others, it's really the software and what I view as the secret sauce, which is non-hardware. And that's why more and more, I think investors are starting to understand this is not an auto company, it's disruptive tech. I believe it deserves that multiple that I think it continues to attain going 2024.
Right, right. I mean, that's the whole point. And that's why, you know, I ask you these questions because I get bombarded sometimes like, oh, full self-driving is so far away. Batteries, they don't really make batteries. They do it in collaboration with other companies. They're not really a battery company. They're not an AI company. It's just an auto company, and it's not worth the current price. You know, do we have actual statistics of any sort of how many batteries are made, that they really are growing in AI, that there really is potential?
I mean, look, I've spent a lot of time at Tesla factories around the world, as well as other factories. And that's why I think it's very easy to be bearish on Tesla sitting there in your spreadsheet in New York City. I think when you see what they're actually doing, that's what separates them. And I think again, that's continued to be a differentiator.
Yeah. I mean, the Cybertruck is coming. That should be an exciting addition too, right? When you talk about the orders that line up for that, right?
Yeah, look, we believe production begins later this year, deliveries into next year. And that's just going to be another, I think when you look at their product portfolio, that's just going to add to the growth. It's going to add to the moat that I think continues to play out over the coming years. Look, obviously we're going through a white knuckle period in terms of multiples, in terms of disruptive tech. I think we go into next year, I view it that this is kind of the next phase of the Tesla growth story.
Yeah, and I know, you know, Tesla is not unionized like Ford and GM and Stellantis. They get basically shares and such, right? I mean, they get shares of the company, and that's sort of the carrot that Elon Musk puts out there to make sure that they don't unionize. What do you think of that?
I mean, look, the debacle that's happened in Detroit with the UAW, that's really been a torpedo for the Detroit Big Three in terms of what, you know, what I viewed is it's going to be a pivotal year in terms of 2024.
Just as Dan Ives predicted, Tesla had a record-breaking Q4. And not just that, the automaker also hit a target of 1.8 million cars delivered in 2023. What this means is that Tesla has set the ball rolling for an exciting year this year. And not just that, it's also heightened investors' hopes for a profitable trading season. Overall, it's evident that Tesla will continue to grow, and of course, we have analysts like Dan Ives who are ready to preach the true virtue of Tesla. What do you think? Let us know down below, and let us know your valuation of Tesla. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.